welcome to our weekly podcast. This is going to be related to the market directly. We're going to summarize whatever's happening in the market, discuss what happened in the previous week, and our forecast for this week. What we will handle this week is basically the majors, oil and gold, which is most of the people that most of the traders and investors are asking about. And if we still have some time, definitely we'll discuss indices and get a bit deeper in that. So, Nour, what it seems like the major thing on the market at the moment is what's happening in Europe, in France, the parliament, the tweet of Macron. We've seen that the market, the euro dollar dropped, and it opened in a gap and not just dropped.
Yeah.
And we're still waiting to see what's going to be the reaction in the European market, and like when Europe is up and running properly.
Currently futures down across the board. At least Euro stocks down. Oh, there is an average of almost 1% today. Euro stocks 0.8, FTSE also 0.9. The French or CAC is down about 1.2%. So yeah, this is going to be interesting to see how it's going to play out during the day.
Yeah, and especially when the US opens. Then there is something that I was trying to look at, and I've done a small research on. If you compare the French indices or basically whatever's happening in Europe compared to the US, you can see that European indices dropped a bit more, although their performance or the expectation of the earnings should be much higher. So there is around 30-35% more drop, or they're oversold compared to the indices, which is something that creates an opportunity for the people that would like to trade the earnings and the news on those stocks or indices as well. So this is one of the things as well. So let's mention the support and resistance on euro dollar at the beginning, because we already started with that.
Sure thing. I mean, from a technical point of view, you have, especially after what happened last week from the US, there's some sort of changes. But at the same time, if you zoom out just a little bit, maybe if you zoom out from January 2023, the euro is still trading within the same range since then.
Yeah.
There's literally no trending market yet. It's still trading within the same range. However, that range keeps narrowing. Like at some point, during from January 2023, the range was between almost 105 to 110. At some point, it started to be from 112 all the way down to 104. But since then, we've been kind of getting the range between just about 107 to 109, and this basically tells you that at some point it might be.
But the range changed a little bit at the end.
Oh yeah. But at some point, this gives you the idea that this range might actually. Yeah, that this range might actually just basically end with the trending market at some point, or who knows? Most probably, I would say like by maybe after the Fed, and especially after the rate cut in the ECB. But currently, I think since the euro now is trading below all the major moving averages, that includes the 50, the 100, the 200-day moving average. Next support is basically 107 to start with. You have 107, 107.40, and then you have the most solid one is 107 figure. That is definitely, because 107 has been holding since December of last year. So that's one level to keep an eye on, definitely. On the upside, it's still the 109.
Keep in mind that the trend up changed for the time being, because lately, since if you look at the daily chart, since let's say
the bottom of April.
Since actually 15 April, we've been going up, and that trend has been broken since we broke the moving average 100 and even the 50 at the same time. So now I think we're heading for the 107, 106.40. These are the next levels for the euro dollar, but we're still consolidating within the same big range between or since the beginning of 2023. So all good. We've seen some action actually on the dollar index, and if you notice that we couldn't break the 104, which is a very strong support, and that's been built since even before April, since March actually. And we discussed that although the trend up was almost going to break, and at least the dollar index gave us the impression that it will break, but we're still going on the sideways thing. And now it's 105.26, which basically affects most of the major currencies. We've seen dollar yen, we've seen euro dollar, we've seen most of the other currencies getting affected. Keep in mind
commodities as well.
Yeah, everything, literally everything. And at the same time, keep in mind that we have elections in the next, I don't know, 4 to 5 months, and literally most of the major global economic powers in the world. So in the G5 or G7, we have elections everywhere, and that is affecting the market. People want the change, as it seems, and they're pushing for the change. And they're kind of like fed up with the things that we're living at the moment, the boring things that we were just discussing, Nour, before we start this. And the market became a little bit lame, although there are some really decent opportunities, but still not as we were before. Like if you go back a couple of years before, it was really good in action, and we had opportunities daily on multiple currencies.
We had a trending market back then. Now it's still in between because of the amount of uncertainty, whether if it's about, interest rates uncertainty, you have the growth uncertainty, soft landing, hard landing uncertainty, inflation being sticky, being not sticky. So all of these are playing a big role too.
And the interference of the central banks, and after that saying like, I think we made a fast move by the ECB. That was a weird statement, actually. It was really funny.
I mean, the ECB had no other option but to move, because they basically, it wasn't a surprise, and at the same time they made it kind of clear it was a dovish, hawkish cut at the same time, because they did cut. They said, we don't know when we are going to cut again, but at the same time, if things changes, we can reverse course. So it was kind of a balanced statement. That's not a bad idea. But now we have to look into the differential between how the Federal Reserve is going to move and how the ECB did move. The more the Federal Reserve will hold rates, this is basically going to keep on affecting the euro lower, especially if the data in Europe suggested that, okay, well, the ECB at some point in the next few months will have to cut again. So the differential traders will have to look at the differentials between between rates going forward, because this is going to be the thing that will easily give you at least some very high clue where the market is going to end up, maybe by the end of the year or in the next few weeks or the next few months.
Starting from here, but keep in mind one thing, that the Fed, as we know, is going to be a bit more cautious. They will test with other markets, and they will see the market reaction, and then based on that, they will take a decision that will suit them the best.
Testing the waters first.
The same as Canada and ECB. So as we were talking about the dollar index and the strength in the dollar, we noticed that dollar yen moved back up to 157.12 at the moment. We are near the resistance on the dollar yen, the small resistance on the daily chart, which is 57.75, and then the next one, if we cross and continue up, which is around 158.5, and then 160 after it. But it's getting toppish. We've been moving up for the past couple of days, at least 4 or 5 days, trending up, the major trend up, and we're still trading above the moving average 50. So definitely above the moving average 100 at the same time. Still respecting the trend. So don't try to fight with it. Just ride the wave and then enjoy the profit until we hit the first resistance in front of us and take a safe decision in your risk management. Don't over leverage your account. Do you have something to add on dollar yen, or shall we move to
Dollar yen is the only thing I would say is just be careful when it comes to, the because this week we're waiting for the Bank of Japan, of course, and the Federal Reserve, but just make sure, I mean, always keep an eye, because Bank of Japan, whenever they actually intervene in the market, because they did that twice last month, they most probably will be more active. And that's the only thing that I would say. Just be cautious when it comes to your risk management, and especially on dollar yen, because if they intervened just like what they've done over the past few weeks, the intervention was not easy, and it was also, I mean, huge. From 160, the yen went all the way down to 151. That's 1,000 pips within few hours. So that's the only thing I would add.
Yeah. So actually, that makes a lot of sense, because we've seen what happened before. So let's jump to gold. We have a lot of requests to talk about gold. So gold has been going down for the past 3 weeks. We definitely saw that 3 weeks back the move was huge. The sellers were selling in much more confidence that the same pace that they're doing at the moment. We've seen some bounce back from the 2,300, and we've seen a trial to go back on the track and retest above the 370, but that failed. That was last week, and then the market was able to close on a negative weekly candle. At the moment, we're still trading at
a huge negative weekly candle.
Yeah, exactly, and it shows a lot of push from the sellers to push to keep keep pushing and put the pressure on gold at the levels here. Plus the news from China came at the right time that the central bank is not buying at the same pace.
Oh, actually, they stopped.
They stopped buying, exactly. So this disappointed as well most of the buyers as well. At the moment, the break of 290 to 80 is going to lead us to a whole new era, I think.
Because that would be a head and shoulder on the daily.
Yeah.
That's going to be a head and shoulder on the daily if that happens.
It will create the head and shoulder, and then we're gonna most probably, if it happens, it's gonna continue to 150, and then after that we have the 2075. These are the levels in front of us. If we break the levels that we are at the moment without any other interference from the Fed or any other a change in the market, if we just continue with the same pace that we are trading at the moment.
The question would be the Fed meeting, and the U.S. inflation data, which is the U.S. inflation data is actually tomorrow. No, wait, not tomorrow.
Inflation data?
No, on the 12th. It's going to be on the 12th of, so it's going to be Wednesday. And it's right before the Federal Reserve decision, basically. It's going to be at the same day. So you have inflation and FOMC at the same day. So that's going to be interesting. But expectations are stable, especially stable, but at the same time, the core CPI is expected to slow down to 3.5%, down from 3.6. As long as we are within the expectations, or to see a slight slowing down, this might actually keep the market kind of in a stable manner, waiting for the Federal Reserve. But creating a change in the dot plot of the Federal Reserve, this is going to create a lot of noise. And of course, you'll have gold, silver, one of the main assets that will have to move in. I would say also high volatility, depending on the data. So I would say still do not rush into any kind of decisions. Do not overreact to the data, because even if inflation comes in like lower, higher, whatever, what matters at this day is going to be the Federal Reserve, not inflation. So that, just keep that in mind.
Yeah, and the major news for the week, as you mentioned, are between Wednesday till Friday. So keep an eye on the news. We're going to see a lot of noise in the market. So make sure that you put your stop loss take profit, and always expect and calculate that those spikes that might happen because of the news. So it doesn't just go with your stop loss and then come back to the same level. So take that into consideration and count them.
True to that.
Can you tell us a little bit about oil, Nour, because I think we're almost done with the time.
Oil is basically what we've seen at least last week after everything happened with OPEC Plus. I think we're still, I mean, there's no reason for us to think or even to suspect that oil will be on a buying spree, especially also after after OPEC Plus from one side. The dollar index keeps also pushing again. We're over 105 now. So the bearish outlook for oil is still the same, and this is as long as we're talking here about, let's say, Brent crude, as long as we're below the $82, it's hard for us to think that that the trend would change as long as we're trading above as long as we're trading below the 82.50. Other than that, I think we might, I mean, the solid support is still between the area of the 75 and also 79 to 77, which had a little bit to the upside from there. But other than that, I think it is a little bit oversold, but there still has a little bit more room to go down again, as long as
about the US oil, right?
No, that's Brent crude. That's UK oil. That's Brent. US oil, I mean,
prices, and it doesn't match. So I'm like,
yeah. No, the US oil is basically almost the same when it comes to just technical outlook in general. What we had support already at 72.50, and that basically helped the price a little bit higher. However, as long as we also,
but we're still trending down.
Yeah, we're still trending down. There's no reason to think about uptrend unless we trade above. Again, don't forget, we're also underneath all of the major moving averages, 50, 100, 100, 200. So as long as we're below at least 77 to 78, it's hard to say that oil will be able to push back up.
Yeah, but there are some decent hit and runs that
I mean,
still take advantage. Like if it goes up from here, a small hit and run would be nice. Hit and run from the 73 was nice as well. Just go take $1-2 and come and leave the market quickly. Not don't keep the trades in the market for a longer period. If you are a buyer, even if you are a seller,
don't mirror your trade.